Hey, Val, how's it going?
Great. How are you?
I'm doing well. All right. Well, we're back here wanting to share some more information on our fun market. It's always fun. Every week is something different. This is why I think I love this career. I'm the same longer than a day or two sometimes.
No,
But
you learn something new every day or something changes every hour. It's keep you on your toes.
yeah, so we were just chatting a little bit about all eyes on the feds. Share with us what's going on.
Yeah. Big week for the Fed. Obviously, their meeting is this week. So the investors have already priced in a cut coming. So that won't
Okay.
shock the market when it does come,
Mhm.
right? Investors have to plan ahead. But what eyes are going to be on is what Jerome Powell and the Fed say when they release that cut, because they're looking at the future. Okay, are they going to pivot and go towards a cutting or reducing of the rates, or are they
Mhm.
going to do a cut and see what are they going to say in their testimonial or their or announcement? Right, that's what everybody's looking at. And so obviously
What
with
are
the,
we hoping for?
we're hoping for aggressive cutting in the future. I think that's one thing that a lot of the reports are showing needs to start happening. Probably
Mhm.
should have, like I've said before in the videos, should have started a while ago. But we're kind of, the Fed is really trying to be cautious of not going to stagflation, and B, to not have inflation just shoot right back up the next day. So I think based on what they've been saying and what you've been hearing in the news, I think they are prepared to pivot, right, and to do that cut. Now I just have this little bit of a gut feeling that it's going to be like a cut and see kind of scenario, because they
Okay.
want to get down. They don't want to overnight it drop it, which is what
Right.
all refrigerators would love and all the home buyers would love, is just cut it now. Let's get the best rates. Let's get back into the fives or the fours, right? Let's go.
Yeah.
Yeah, I don't think that's going to happen right immediately, but I think that we are trending in the right direction to where you're already seeing it. You're already seeing rates coming down. You're seeing them cooling off, right?
Yeah.
So I'm quoting some of the best rates I've quoted in better part of a year. It was like
Isn't
this
that
time
crazy?
last year.
Yeah. That's awesome.
So really exciting time. A lot of those clients that I purchased in the last 3 years. Now I just sent an email out that could save almost $450 a month in a refinance for that specific client. So it's a good opportunity to start refinancing or look at the numbers. Plenty of clients that I've started the process with, and now we're sitting and waiting to see what the rates are going to do the next week or so, and then lock it in. We want to help them out and make sure that they are, get a little better payment, get out of the sevens, which is what most people in the last couple of years have got. So
Now, one thing we thought about too is investment properties. How are those looking for? If you have an investment property that's in the sevens, is it still worth looking at? Well, yeah, look at about there, or what is what the what do you think with investors right now? Are they like a sit and wait still, or sorry, did I freeze up there?
you froze up there for a second, but I got most of your question. Your question is, okay, how about investor? How about investment loans? How about the rates for the investors? Those rates come down with the primary interest rates, right? So I would say it's worth looking, because if you can increase your ROI three, $400, $200,
Mhm.
whatever it is, that's worth taking a look at as an investor. Now, some investor programs, that's where, if you send me the Morgan Stanley, we could dissect it. But some of them will have like prepayment penalties because they are out of the box loans. So
Uh-huh.
we'd want to make sure
Yeah.
um, that it makes sense to refinance just straight numbers. And that's why I love working with investors, because it's not really emotional involved. There's not a lot of emotion involved. It's just straight. Okay, what are the numbers? Does it make sense? Does it not? Right.
Yes.
Um, and that's a good
But
opportunity because, like I said, if you have bought an investment property in the last 3 years, you probably have a good chance to at least increase the ROI. Maybe you're barely making money, make more. Maybe you were losing a couple of dollars. Now you can start making money on
yeah.
those investments.
Yeah, that's it. And I know a lot of investors who are kind of like, they're okay to lose a couple $100 a month because they
Mhm.
understand the appreciation factor.
Yeah.
But if there's an opportunity finance and make up that money, it would be great. I
It's
know
very straightforward. And I love putting together those spreadsheets and be like, here you go.
rents
Here's
are
the
changing.
numbers.
Yeah. And 2019, 2020, and they started coming down some. And in the past, probably 2.5 years, they have changed quite a bit, depending on what type of rental you have. Like we do all furnished rentals ourselves, not necessarily short
Right?
term or Airbnbs. I'm talking like like we cater usually to someone who's staying longer than 30 days. Just because in some situations rates are higher, and those furnished rentals help me get a little bit more money than a long-term like yearly rental. So, but it's been good. And for us, those furnished rentals have worked, but it's always nice if we want to go to a regular long-term, if the rates come down, we can change it up a little bit. So,
Exactly.
and then, so on our side for real estate, we've got about 24,000 and change listings. So we're kind of staying around that mark. But I was on a call with Tina Tambor from the Cromford Report, and I absolutely adore her. And she's just a brilliant statistician, and Michael Orr, who runs the Cromford Report. They basically just focus on our MLS, so AR MLS, which covers Maricopa and Pinal counties. And she showed us this chart. We see this very crazy trend. All of a sudden, we're heading into that balanced market. So it's no longer a buyer's market in a lot of places. It's become a seller's market in quite a few places, especially luxury. And so those buyers who've been sitting and waiting, you still have an opportunity. It's getting close to being a challenge.
Yep.
So
Well, like I say, it's time. The time is now.
yeah,
Before this pent up demand, honestly, is going to just break through.
yeah, agreed. And then on the side of the Burnett Sitzer case, which is the lawsuit that was filed against our compensation and against collaboration amongst agents and all this other stuff. And there was what they call an Atticus brief that was recently put out from a law professor. I want to say she's out of Buffalo, but I could be wrong on that. But anyway, basically saying like really the sellers had no standing in suing agents for their compensation. So this Atticus brief, there's a judge who's apparently looking at it. I did share this with a real estate attorney friend of mine, and he chuckled when I mentioned this. He was so disappointed in our response. But one of the things he mentioned was it's typically these types of briefs are initiated when the lawsuit is in progress, and being it's already a year and a half out, he was going to go look up the information and kind of see like if there was more to it than that. But I'm like, I'm going to stick with that. There's still hope for that. This kind of weird. Now, not everything is necessarily wrong with the current system that we have, but I feel like there's a happy medium for what we went to what we have now to somewhere in the middle. It's more comfortable for everybody. So, just my opinion, but no one's asking.
They're not asking Christie.
Like if you just listen to what I say, a lot of times life could be so much easier for you.
Happy Christie, happy life.
Sometimes I feel like that's a true statement. Not all the time. Sometimes. In real estate stuff, I feel like more often than not. Personally, I don't know. But anyway. So thanks again, Bill. I appreciate you sharing your wisdom on our interest rates are always going to be the hot topic for right now, right? Like watching them bounce around and
that's everybody's.
Yeah.
That's everybody's hot topic right now. It's really tough just breaking through the noise that you hear out there. It's going to be the hot topic for probably a while.
Yeah, because everyone's trying to time the market. Should I sell now? Should I buy now? Should I do this? Should I do that? And sometimes you just can't. You have to do it because you're either moving or your lifestyle has changed or something's just different. You're downsizing. You have to upsize, It's, I have twins. So now it's like when all of a sudden you have more children than you expected at one time.
Yeah, exactly. That's awesome.
There's different life things. Like we call them all the D's, right? Diamonds, diapers, divorce. So there's a lot more D's. Deployment, debt. I think there's like 12 or 13 of them. But these are all the reasons people are usually more inclined to move.
Yeah.
So, but anyway, thank you again for chatting with me today.
100%.
As always, if anyone has any questions from Bill or I, I'll put our contact information in the comments. Feel free to reach out. We're both super friendly and super nice. So we're happy to talk to anybody and everybody. So Well, thanks again. I'll talk to you soon.
Talk to you soon.